All right, good afternoon, everyone. Futures Brizio here. Actually, good evening. It is 6:40 p.m. on Friday, July 18th. Make sure we smash that like button, subscribe to the channel, and any questions or comments, leave them down below. Just do a quick wrap up from today and typical summer Friday trading. Some action, but not a heck of a lot. Well, just jump right in here and try to keep this as quick as possible. So we'll start here in futures on natural gas. You can see here on the 4-hour chart, we've kind of entered into this sideways price action after a nice run up here that kind of negated a lot of this bigger downtrend here. And so we'll see what happens next week. You know, like I said, we are kind of running now inside of this little consolidation zone. You can see we've got, up to the lower end or the upper end, the lower end, upper end, lower end, typical consolidation pattern. Eventually these end, but they could go on for a while. This is only a 2-hour chart, so we'll see how it shakes out. And we'll look at the CFD chart in a minute on TradingView to see if we get any better clue of where this might go. But nothing doing for me, at least, on natural gas. On to 10-year yields. So as I talked about yesterday, and these are the arrows I drew out of the video yesterday, I did expect this to come down further and then potentially start to rally back again. And maybe that's what we have. You can see I'm holding a long position here. I don't know if this is going to hold out. But we will see. I actually was going to try to move my stop loss down before the market closed, and I did not. So I wouldn't be surprised if this gap's lower. I'm going to get stopped out on this on Sunday night. But whatever, we'll see. But again, what we had was a nice uptrend going. Okay, we had this last swing here on the 4-hour chart. Shot up, made a new high, and then it's come all the way back down. And, again, as long as we hold this area right here, this uptrend is still intact. And, these are the arrows I drew on the video I think I made yesterday, where I said I expected it to come down a little further. And then as long as this area holds, it would rally. So then this afternoon probably wasn't the best time to trade, but I still felt, because I was planning on holding it for the weekend anyways. We had this candle right here, kind of strong reaction off of this zone. And this is probably, well, it might even be more than a 78% fib retracement. Yeah, it went right to the 78.6 fib retracement. And again, there's nothing magical about fib retracements. I felt like this was a pretty low risk area to get into this, because if it does break lower and take out this swing here, then obviously I want to be out of any long positions. And, it's like I said, it's a pretty low risk trade. So we'll see. Even if I do get stopped out, that's fine, because you can see my stop loss on this red dotted line. But I would still consider re-entering if we get more bullish price action. Again, as long as we hold this area, right in here. So we'll see what happens with yields. On to corn. Corn didn't do a lot today. It kept trying to go higher today. On the last candle of the day, it did close at the high. But you can see most of the day we just kind of went sideways. I still do think that corn has some upside potential, as I talked about yesterday. Here's the swing on the 4-hour chart, and this was kind of the lower time frame swing low. But this is the swing high that led to this low. So as I said yesterday, I do still say we are still essentially or formally in a downtrend, at least on the higher time frame. And so I do think that, we could see a push higher. And again, as long as we stay below this swing high up here, then we are still in a downtrend. This is obviously a real strong liquidity gap area here, liquidity drain with this gap on the chart and this big, huge wick. So this is an area to watch when price gets up into this range, which it's almost there, to see if we roll over and head back down. If we smash right through there, then, we probably will take this high out and start to go higher, in which case my bias will turn long. But I do think in the very short term, at least, we can be long on this, at least through here, but that's not a heck of a lot. I'm probably just going to let this play out and then see what happens once we get somewhere in the range of this big wick and this gap here on the chart. Okay, and then we'll see what happens. If we get nice strong pushes through here and we just blow right through here, we probably will turn and go higher, and then that's great. Then I'll start to look for longs on the way up. So I didn't do anything with corn today. Just didn't really impress me much. I mean, this is the 4-hour chart. If we look at the whole session right here, it's basically these two candles here on the 4-hour, and the price didn't do anything. So, all right, on to soybeans. I was long in soybeans. I closed this trade a couple of minutes before the close. I did leave off the highs here. I think I can bring it up. Yeah, here was that position. I got in long yesterday on the break of this structure right here, and I got out here. You can see I did give back about half of my profit. Unfortunately, I was actually out at this time, and by the time I realized what time it was, I looked at the chart, I saw this big bearish candle, and I just closed it for what I had. Now, I do think that, like corn, we could see a push higher. I don't know if there's anything really magical about this area, if this is just profit taking. And I still do think, like corn, that we could come up here. And again, we're still technically, in an uptrend here. Excuse me, in a downtrend. We have this 4-hour major swing right here. So price trading up into this gap area is certainly something to think about. We did have a couple of really big, strong bearish candles at the end of the day today. Actually, 3 candles in a row, but 2 of them particularly bearish. But again, you know, this is really, you know, Friday afternoon, light volume, probably, you know, just crazy candles. And again, I will look at the CFD chart in a minute and try to get a better picture rather than looking at just this futures. Okay, so overall, I do think we'll see it like soybeans, like corn, to see at least another short-term move up. And then we'll see what happens as we get up towards that gap where that arrow is sitting. Let's get rid of all this other stuff here. All right. And then on to crude oil. This is a sell stop I have on crude. I didn't jump in because it was kind of late in the session, but I'm just kind of looking at this. You can see, you know, we were going up here. We had this big move down. This is the 4-hour chart. And then we were, you know, making, you know, higher highs, higher lows. And then we had this big bearish candle. We came down, we took out this structure right here, closed, and then we came all the way back up. Again, this is about the 78.6 retracement. And then we started coming back down again. And if we go to a shorter time frame, you can see we had 2 really big bearish candles. We did kind of take out structure here. So because of the time, I didn't want to just jump short. But I did put in a sell stop. You can see this is a stop order. It's not been filled. The market has closed now. I'm going to leave it on because I can't change it now. We're into the market's closed for the weekend. But I do have plenty of breathing room with the at least the initial stop loss sitting above this swing high. If I do get filled, I'll probably adjust that. But so I am expecting crude to come down some more. And we'll see. I was kind of neutral on crude oil the other day when I made my video. I think I said it was kind of neutral. But because of this price action today, probably a little bit more bearish. And so we'll see if we get filled on this next week. If we just jump over to the CFDs here, now let's look at 10-year yields first. And again, I was talking about getting back into a long position here. So let's get rid of this line just to make the chart not so ugly. So this is the 1-hour chart. Here's the 4-hour. Okay. And you can see again what I was saying, as long as we hold this area, this is very similar to what we saw on the futures chart. And so as long as we hold this area, I'm still looking for higher prices. I do think there's more we can go to the upside here, but we'll see. You can see the entry here in terms of what I took on the futures chart is not so good here. You know, it was basically on these candles in here. This is not very impressive, to be honest. This is the 15-minute chart. I mean, honestly, to be sure, you know, I probably would want to see something like this. you know, where price kind of like takes out on this 15-minute chart, you know, a recent swing high, which, you know, well, either this one or this one, this is not big difference, but so more conservatively, this one, you know, otherwise this downtrend could easily continue. So we'll see what happens, but I do still think overall we're still in an uptrend, and this does look pretty corrective here. And we'll see as, you know, we've gotten down into the almost the origin of this big bullish candle. There's a gap right here with this big wick where price pulled off these lows, and that's where price kind of reacted off of today. So even though we don't really have a good signal on this CFD chart, I still remain pretty bullish. But again, price has to hold this area. Soybean, again, we see this gap. This is very much like the futures chart, right? We had this move up. We did have late day selling. You know, here's that kind of late day selling. It doesn't look as impressive on the CFD chart, which is not surprising. And so we go back to the 4-hour again. We have this huge gap in the chart up here overhead. The low end of this is above these highs, and the upper end of this gap is well above. So at minimum, I would expect that this gap will get filled. It will come back up somewhere in here. And if we come up and take out this 4-hour swing here, then that would probably change direction to the upside. But, you know, overall, I don't think you can ignore this uptrend, at least temporarily. The 1-hour chart, the CCI has dropped down back into the oversold area. Obviously, it was the end of the day, so there's nothing to do there. But I am still overall pretty bullish on soybean. Corn, again, this probably looks very similar, 4-hour chart. Now, we don't have this gap on the 4-hour chart, but we do have this huge bearish candle. So there's obviously some liquidity sitting in here. It's not a gap, but you can see on the CFD chart, we've come into that gap. You can see where I put the crosshair. It kind of cuts this candle right in half where we put these lows in today. So that's part of the reason why I was not as bullish on corn. And I did say that the other day that I was bullish, but also as neutral. So I think this is a key area. I'm not looking to trade corn long from here, to be honest, because I don't, you know, this area, this liquidity drain here, concerns me a little bit. And we do have this swing high up here. If we get, and we come up and we take out this area up here, then obviously that's a different story. So, but anywhere inside the range of this big candle, we could technically, you know, get a turn back to the downside, because on the higher time frame, we do still have a downtrend in place. Okay, so if you did want to trade this long, I would just be cautious and aware of this area. You know, basically this area right in here, basically from where price is now on up through the top of this big bearish candle as a potential where we could potentially see a turn back down. But if we get through there and we flip above here, then we're probably going to go higher. So I'll just watch corn as it proceeds next week. And if we do get some really good bearish price action on a shorter time frame, 15-minute, 1 hour, somewhere in there where we get some really strong bearish price action to take out some swing lows on the low time frames, then I would definitely think about, going short again. Oil. So we saw I have that sell stop on oil, and we do see that break right here. So here was that up move I was talking about, and then we had price come down, took out this. We do see that on the futures chart. And then price broke below this area and then snapped back on this candle. This is the 4-hour chart again. And now we're trading back inside this tight little range right here. So, that's why I was saying that oil was still pretty neutral, because the fact that it came back inside this zone makes me more neutral on this. Yes, I have that sell stop, but I'm going to make the market come to me a little bit, although that sell stop isn't very far away. I'm going to make the market come to me because, if we break and start trading strong back above this zone, then, you know, it would turn out that this was just a sweep and then we're going to go higher. But that did not prove. I mean, yes, it came back inside the range, but there was no follow through buying after this candle right here. There was no follow through on this going back up. You can see we had 3-4 hour candles do absolutely nothing. So, all right. So, at the moment, I'm, you know, neutral to bearish on oil, but that could change. We talked about corn already. And then natural gas. We'll zoom out a little bit on natural gas. Again, we do still see that, we see that consolidation area here on natural gas, just like we saw in futures. And so, you know, until we get some kind of action here to get out of this consolidation zone, not really interested in anything with gas. If we look to the right and just again, I mean, we have taken out structure areas, right? I mean, I think this is a valid structure area right here, led to this low. We had another one here, led to this low. Now we have this one sitting up here, led to this low. So, you know, natural gas, that's why I had a bullish bias on natural gas, because it does look like we took out structure. The market might just be taking a breather here, and then, you know, maybe eventually we'll pop to the bottom side of this range again and then blast through it. But anyways, because of this sideways action, I'm just neutral. I don't trade inside these consolidation areas. I'm not saying you can't. Certainly a lot of people do. But I'm going to wait and see, you know, what happens when this, you know, I'm assuming breaks out in one direction or the other. It will eventually. And then we'll go from there. So that's natural gas, and that is pretty much the same story that we see on futures. Okay, and lastly on Aussie USD, I'm not going to do a lot with Forex, but again, just looking at market structure, again, this is the Aussie AUD, and if we zoom in here on the 4-hour chart, let me take this fib off here just for un momento. You can see we had this swing high down to this low. So last night before I went to bed, I put a sell limit order in right here, which was actually at the 61.8 fib level. That's where that green line is. I put that in last night. That's why I had that fib drawn on there. And I put a sell limit in. That did get triggered this morning during the, you know, mid-London session. And I put my stop above this swing high. It did poke up, and this actually is like the 78.6 level up here. So I went into a little bit of drawdown. But you can see we ended the day in profit, and I'm just going to hold this. So I do expect this will go down and make a new low. There's really nothing to stop this from falling until we get, you know, probably somewhere back down towards this major swing low. I don't really think any of these candles are going to stop it. We'll probably just continue down. So I'm holding this Aussie USD into the weekend. I have a big enough stop loss where, unless there's something absolutely crazy, any kind of gap we get on Sunday when the market reopens, I should have plenty of working room here. Aussie Swiss did start to come back down again. So, you know, here's the 4-hour chart. And I was thinking that maybe we're going to see this breakout because we took out this structure. But you know, it looks like maybe that was just a sweep, this because we took out this structure right here on this candle. But we'll see. This is not a really heavily traded pair, so it doesn't have a lot of great volume in it. But I was just trying to find something else to look at, and I don't have any Swiss pairs on the board. I could look at dollar Swiss, but the euro dollar and the dollar Swiss are pretty much opposites of each other. So if you're trading the euro dollar, you don't really need to trade dollar Swiss. So we'll see. Pound yen sitting up at these highs. It's just kind of back. It's in a consolidation now, just kind of trading in between this range here. So I'm not doing anything with that. Euro USD. It looks like we did get a pullback here and potentially still heading lower back down towards this area. We had this We had this liquidity sweep here. This was earlier in the week when Trump was talking about the Fed chair, and then so we snapped up for it temporarily, and now we've come back up off these lows, and so I do think we'll probably head lower. So that would fall in line with Aussie USD, just dollar strength in general. Dollar yen, not the best one, even though the dollar might be strong. I think the yen has some strength right now too. So that's forcing this to kind of move sideways. So dollar yen's not really a big interest. And here is pound USD. And I didn't see this today. This would have been a great entry. Now, the thing is, the reason why I chose Aussie dollar instead of pound dollar is because on Aussie dollar, it has a lot more, empty space between this low and where price is. You can see, we could get price coming all the way down towards here. So there's a lot of room here. On pound USD, we're already sitting at this support level, and it doesn't mean it's not going to break through, and it looks like it very well might, because again, here's that Trump talk with the Fed chair, and then price bounced off of here. It looked like, okay, we're going to come off this low and keep going higher. And we came back here, and now we're heading lower. But again, I chose Aussie USD instead of pound USD, one, because I saw it, and two, because of where it's sitting. There's no point trading both of them like that, because if you're wrong, you're doubling your risk. I mean, yes, if you're right, you double your reward, but it's not worth the risk, because if they're both overall moving in the same direction, then take the one that's got the better risk to reward ratio in terms of where you think price will go. And clearly in this case, the Aussie USD, at least to me, is a better choice, just because there's a lot of black space between, even this low and down to this low. So I can trade all of this, and manage it hopefully down to this area where pound USD is already sitting there. Okay. Now, if pound USD may very well break through here, and then if it does, then, this next swing low down here would be, a good target. So we'll see. It doesn't mean I won't take pound USD next week, but I'd want to see it, definitively take out this zone right here, and then maybe trade it on a retest back up again to this area as a potential short-term management, zone here. And then of course we've got this one further down. All right, so I'm going to leave it there, guys. Hope everybody has a great weekend. Make sure you smash the like button on your way out. Subscribe to the channel, and if you have any questions or comments, leave them down below. And I'll be back next week, and we'll see how all these things shake out. All right, guys, take care. Talk soon.